We're talking Tesla. The share's getting hammered today, but still up about 100% so far in 2023. Kev, give me your take here. They're changing the Model 3 sedan, making it a little sleeker, but then they cut the price in their Model S and Model X in the U.S. and China. Is this, due to the fact that maybe a demand issue, or do you think this is more of getting ahead of some of the OEMs in this space, the EV makers, Ford, GM, that are going to come out with a plethora of models? Is this strategy, or is it maybe based on what's going on in demand?
Well, that's the tricky part to figure out. I have a counter trend take on this. I think that Elon Musk is still putting ultimate pressure on the U.S. car manufacturers, especially with them about to pay big dollars in labor disputes and new contracts. I don't know. We don't know for sure. We won't know till the numbers come out if demand is dropping. But think about this. From a China perspective, they should, with all the stimulus going on, you would think there would be some hope for the future, for China. And China's numbers overall aren't coming in as bad as expected. It's actually pretty firm here. And they have a laundry list of things that they're doing to stimulate their economy. Now, I think that's actually good for Tesla. The new revamped Model 3 sounds kind of interesting. A new sleeker model, more aerodynamic, longer battery life, a couple of stiffer body, improved suspension, improved rider quality. So they're making improvements and tweaks to the Model 3. But the price drops in the Model S and X, they're massive. And now he's got them both below that threshold for the $7,500 tax break. I think he's putting maximum pressure on U.S. automakers to try to compete with him. It is, like I said, I might be dead wrong on this opinion, but I think he is competing hard to be the overall winner, keeps putting pressure on the U.S. car markets, Tom. That's my take. Stock's not believing that. Stock's down 4.5%, Tom.
Yeah, Alex, margins have been shrinking, but they still are double or triple what Ford and GM's margins are at this point. So he does have, the capacity to continue to lower prices, put some pressure on a lot of the auto manufacturers that are going to be releasing more models. Your take here on Tesla? I mean, it's still had a good run. It's still up 100% so far this year. And you got an example trade for us, too.
Yeah, I don't disagree with Kevin's position as to maybe why they make these decisions. I mean, they also have a different model of how they actually sell the car. You go to Tesla directly. You don't have this dealership model as an intermediary where, the dealers are buying those cars and then trying to sell them for higher. You're not going to be able to move prices around as quickly when you have that marketplace as opposed to directly at Tesla. What has Tesla's plan been all along? It was initially, and he wrote it down on the piece of paper, I think he tweeted it a couple years ago, it was make an expensive car to make a less expensive car to make a more affordable car. That's the plan. The plan is to make Tesla affordable. The plan is to be more efficient, but it's also an implicit admission that people aren't buying these cars at this price right now at the rate that we want them to. So they're going to be flexible with prices. We saw prices going higher at points. I mean, I think earlier this year, and now we've seen kind of the opposite. And so they're going to be malleable to the demand environment that they're in, where the rest of the marketplace is sort of stuck to the the MSRP price, and then add on the couple thousand because you never quite get that sticker price. But I guess my point is that Tesla's not necessarily trying to be Ford or GM. They're trying to be Tesla. Yeah. And if that model puts pressure on GM and Ford, great. But in the end, this is a growth-minded company, despite the fact that it's a lot more mature than it used to be. It makes a lot of money now. Yeah. Still has a pretty crazy valuation for basically a car company or a manufacturing company. Yeah. But you can see just simply looking at how analysts approach this name that it's more mature. What have we always said about Tesla? It's super polarizing. There's super bulls and there's super bears. Well, now 40% of analysts on the street have a hold rating. Yeah. I didn't see that 2-3 years ago. Nope. So I think that's a credit to what they've done at Tesla. But if you're cutting prices unless you can say we're going to sell, enough more cars, which they're not, to offset that loss in margin, it's going to impact the stock price in the interim. So I think it makes a ton of sense, the reaction we're seeing. But I think that this is a move from more of a neutral stance than a position of weakness. I mean, this is still the premier car company in the world, and it's still the premier growth company in the world of that space. That being said, self-inflicted wounds are going to lead to stock prices going down, and cutting your own prices is a self-inflicted wound.